President Trump has come out very positively predisposed to certainly Bitcoin, but we think everything crypto, DeFi or decentralized financial services. And so that's going to be very exciting. But the regulations are also going to change. I think the regulatory cutbacks are going to be profound. In his first administration, President Trump said to regulators, you want to put in a new regulation? You have to take away 2. I think that he'll be even stronger on that.
Cathie Wood, CEO of ARK Invest, believes that Trump's administration could ignite a massive Bitcoin bull run, driving it to historic heights. Trump's pro-crypto stance is seen as pivotal, with Wood projecting that his policies will create a favorable regulatory environment, support innovation, and ultimately lower interest rates, all critical factors for Bitcoin's growth. Wood compares Trump's economic approach to Reagan's in the 1980s, when tax cuts and policy shifts stimulated growth. She suggests Trump's plans to reduce regulations and lower taxes could lead to similar economic dynamism, benefiting sectors like cryptocurrency. With crypto-friendly policies, Wood expects a surge in Bitcoin investment as the U.S. positions itself as a global crypto leader. With the federal funds rate currently at around 5%, Wood believes that any moves toward easing will further stimulate both the economy and the crypto market. ARK Invest, a key player in cryptocurrency, aligns with Trump's vision for a pro-crypto America, potentially leading to the biggest Bitcoin bull run in history. Let's watch highlights from Cathie Wood's exposition for deeper insights. Please like, subscribe, and enable notifications for more innovative finance content and expert discussions. Thanks for joining us again. Enjoy the video.
So let's talk about macros first. In the early days of the Reagan administration, there were back-to-back recessions and interest rates hit 15%. And that was a very difficult environment for investing. Well, President Trump is coming into office when that part of the equivalent in the Reagan administration has been done. And I remember after that, the 80s and 90s were the golden age of active equity investing. And I think we're going back there. First of all, in terms of the controversy, a deficit back then, after back-to-back recessions, 5.5%. The bond market was apoplectic about that. Investors were as well. And what they didn't understand is that the Reagan policies of tax cuts, along with lower interest rates caused by Volcker, moving from double-digit interest rates to something much lower, that those were going to be very positive for economic growth, and that we were going to grow our way out of the deficit. That growth out of the deficit started in the 80s with the Reagan administration and finished in the 90s with the Clinton administration, taking us into a surplus. We think we're going to experience somewhat of the same thing this time around. The tax cuts, we believe, are critically important, especially if Trump makes good on his tariff promise. Now, I'm not a big fan of tariffs myself, but if we're going to pair tariffs, not on our free trade partners, but on those countries that really are not giving American goods and services a level playing field, but we counter them at home with lower tax rates for consumers and businesses, that's a trade-off. That's a good trade-off. And so I don't think the criticism about tariffs is going to play out in terms of 100% across the board. That's not what we're talking about here. I think President Trump is very pro-growth, and he's not going to do anything to impede growth in that way. What will happen to interest rates here? Now, this is a little different from the 80s. Interest rates were so high at the beginning of the 80s, 15%, that really, if the Reagan administration got anything right, those interest rates would come down. And they certainly have. Now, 45 years later, they are high relative to recent history, 5% on the Fed funds rate. And they are restrictive relative to where we see inflation going. So we do believe there will be a downward pressure on interest rates, maybe even more than many investors expect in the near term, because I think a lot of activity is going to be held back by, a desire to understand how policies are going to change in the future. If we believe tax rates are going to come down, we're probably going to wait. If we're businesses and consumers, this is classic. It even happened during the Reagan administration when he phased in tax cuts over 3 years. Most people just waited until the tax rates were at the point he had promised.
Cathie Wood thinks that connecting innovation platforms such as energy storage, artificial intelligence, and blockchain technology will lead to lower interest rates and rapid productivity growth. The combination is likely to fuel rapid GDP growth and lower than expected inflation. Wood also expects significant changes in government policies, notably in regulatory agencies. Regulations are likely to alter as President Trump takes a more supportive position on Bitcoin and cryptocurrency. Lina Khan's resignation from the FTC will loosen antitrust regulations, allowing for more mergers and acquisitions. Also, Elon Musk's involvement in the Trump administration is expected to minimize government spending and inefficiencies. Musk's first principles approach will simplify processes, save waste, and minimize government size. Cathie Wood argues that transformational technologies will fuel economic growth and innovation, citing the last 25 years of brewing innovation as the foundation. Let's go back to the interview and watch more clips to gain insights from Cathie Wood.
So I think interest rates will be biased to the downside. Thereafter, I think we're going to see an explosion in productivity growth. That's what the convergence among the major innovation platforms around which we've centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the healthcare space. Those platforms are converging and we believe are going to unlock explosive productivity growth, explosive GDP growth, and much lower than expected inflation, because all of these platforms are deflationary. They're technologically enabled, and that's good deflation. As prices fall, units explode, and it's really important. The reason we give our research away, it's important for investors and individuals and businesses to get on the right side of change, because these are transformative technologies. So in terms of government policies, perhaps the most profound thing that's going to happen in the very near term is a changing of the guard at some of the regulatory agencies, the SEC and the FTC. The SEC menace to the digital assets movement. We've lost a lot of talent to other countries because of Chairman Gensler. And I think that's going to change. We know it's going to change. President Trump has come out very positively predisposed to certainly Bitcoin, but we think everything crypto, DeFi or decentralized financial services. And so that's going to be very exciting. But the regulations are also going to change, because we're probably going to see Lina Khan at the FTC leave her position. And of course, the strong-armed antitrust regulations that Lina Khan has abided by, those are going to go away. They've prevented mergers and acquisitions that we absolutely need. Large companies are looking at these smaller companies innovating and perhaps being very disruptive to their models, and they'll probably want to get some of that DNA into their companies. I think the regulatory cutbacks are going to be profound. In his first administration, President Trump said to regulators, you want to put in a new regulation? You have to take away 2. I think that he'll be even stronger on that. And of course, when it comes to government spending, he's inviting Elon Musk into or under the tent. Now, the deficit will go down, we think, because of growth, but also we think the inefficiencies in the government are extreme. And we do believe that Elon Musk, first principles-based white sheet of paper, will figure out ways through attrition in terms of headcount and technology, productivity gains, to really shrink the government as a percent of GDP, getting a lot of the waste out of the government. And of course, every president has promised that. I think this one will deliver with the help of Elon Musk. We do not believe that Elon's going to be leaving his companies. We do believe he'll put in place a process that will be reinforced by some of the people who will be attracted to this goal and want to be a part of helping him carry it out. So there we go. That's the macros. In terms of innovation, we think it's been brewing really for since the last 25 years. The seeds for everything we're seeing today were planted in the years when active management was in full stride, the 20 years that ended in the late 90s.
Meanwhile, Bitcoin's value has risen to more than $80,000 since Donald Trump's victory in the 2024 U.S. presidential election. Trump's pro-crypto position is expected to create a more favorable regulatory environment for digital currency. He has pledged to make the United States the crypto capital of the world and a Bitcoin superpower. Analysts believe that the value of Bitcoin will hit $100,000 before the end of the year. The recent developments have benefited Bitcoin ETFs and cryptocurrency-related stocks. The iShares Bitcoin Trust ETF surged 11% to a record high, while Coinbase stock rocketed 48% to hit multi-year highs. Robinhood, a prominent cryptocurrency trading app, had a 27.4% increase to its highest level in over 3 years. Donald Trump's incoming administration is likely to affect regulation, taxation, and the integration of cryptocurrencies into the mainstream economy. Throughout the election cycle, crypto-friendly voters pushed for a more favorable regulatory framework. Leading up to Election Day, the industry wielded significant influence at both the federal and state levels, with major crypto players supporting crypto-friendly candidates. The FIT21 Act and the Bridge Digital Assets Act are 2 important pieces of legislation to keep an eye on. These measures seek to provide a comprehensive regulatory framework for digital assets, address concerns about money laundering and criminal finance, and strengthen consumer protection. Before Trump's administration takes shape, the crypto sector will be closely monitoring how his policies affect the market. Bitcoin's value may continue to grow as he promises friendly regulations and tax savings. What are your thoughts on Cathie Wood's optimistic economic outlook under Trump's administration? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.